Namaskaram. Now clause number 21, it is having many subclauses, and in fact every subclause is kind of important clause. Nirmala Sitharaman ma'am has amended due dates of tax audit report and ITR in such a way that tax audit report goes by 30th September. You know that TAR will go by 30th September during the assessment year, and ITR should be submitted by 31st October. So they are demanding the tax audit report prior to the ITR. So first tax audit report and then ITR. Technically, tax audit report is filed by the auditor and ITR is filed by the assessee. Now they say assessee may not be reliable. Please understand, assessee is the person who is earning the income. So he will tend to make some claims which are not admissible in the law, but it is the responsibility of auditor to check and verify whether every claim made by the assessee is the genuine or not. And that's the reason if there are certain disallowances which is attracted under PGBP chapter, then he has to mention under clause number 21. So department, income tax department is not relying upon the assessee alone. Department is also relying upon the auditor, and more on auditor, less on assessee, because assessee may not do it intentionally, may not disallow the expenditure intentionally, but as an auditor it is your primary responsibility to disallow those expenditures. Now for that you need to have a very thorough knowledge of disallowances under PGBP chapter. We cannot go and discuss the disallowances in the clause series. We have already recorded and uploaded lectures for whole PGBP. If you want to see, you can check that on Elite Gurukul channel. But right now allow me to focus on the reporting requirement of a disallowances. So clause number 21A talks about please furnish the details of amount debited to the profit and loss account. So it is already debited to profit and loss account, being the nature of capital, personal, advertisement expenditure and all. So you have to mention, because capital expenditure is not allowed under section 37(1), under section 37(1), personal expenditure not allowed under section 37(1). So you have to give the serial number, particular and amount. Advertisement expenditure in souvenir, brochure, tract, pamphlet or like published in the political party, it is not allowed under section 37(1). Okay, expenditure incurred at the clubs. So many of time the top-notch people, they go for the clubs, Bombay Gymkhana Club or this Gymkhana Club, and it is very expensive to have a club membership. So any expenditure incurred at a club, being entrance fee or subscription, how would you justify it? So see, if it is a business expenditure, then you have to justify it. But if it is a personal expenditure, then it is challengeable. And that's the reason if any club expenditure are debited, then you have to do the detailed audit about it. Expenditure incurred at club, being cost of the club and services for the facility. So this is the what is the difference between this clause and this clause? This is the membership fee, and it is actually you are having some drinks or you are having a food or you organize a seminar or party in the club. So the exact cost, how much bill you have paid, and that if that is debited, then you have to disallow that. Expenditure by way of penalty or fine, if you have broken the law, you have broken the company law, you have broken the GST law, and you have paid some fines, and those fines, RTO law, it is debited to P&L account. It is not allowable expenditure. It is in nature of offense. You are not supposed to get the deduction. Expenditure by way of any other penalty. Other penalty means penalty for breach of contract. Penalty for breach of contract, and whenever you are paying for the penalty for breach of contract, only reporting is required, disallowance is not required. This is allowed under law, but definitely government want to have a clear-cut understanding of what was breach of law and what was not breach of law. So they are demanding both the items here. Expenditure incurred for the purpose of the offense which is prohibited by law. So if you have given bribe to somebody under any other name, commission given, business promotion expenses, then you have to check that whether any expenditure done by the organization, whether it is legally allowable or not, because illegal expenditure are not allowed under income tax law. So that's clause number A. We will talk more about clause number A from the explanation given below here. as an auditor, what are you supposed to do here? Okay, inquiry under clause number A, because it is very important not to rely upon the assessee but to use your own understanding of law. Obtain details of capital expenditure debited in the profit and loss account even if the same is deductible under income tax law. We are not saying that it is deductible or not deductible. If it is a 35 AD business, then you have to report it that okay, because of 35 AD or because of section 35 scientific research expenditure, 100% of the capital expenditure are allowed as deduction. But any capital expenditure which is debited to profit and loss account, you have to take note of that in clause number 21A. Other capital assets written off, even that you need to check. Scientific research expenditure, that you need to take. The format to be used for the officer purpose is given above. Obtain the details of capitalized in the cost of the fixed asset and cost of work in progress. Whatever expenditure you have incurred in the year, whatever cost you have capitalized, even take note of that. Ensure correctness of the details of the capital expenditure and vouchers and assets and records. Check the complete details of the expenses in the following heads. Ensure that it is not a capital expenditure. So traveling expenses incurred to acquire a machinery is a capex and it should not be debited to P&L account. Staff welfare expenses who are constructing the plant and machinery is a capital expenditure. Wages and salaries paid to the people who are doing the installation of the plant and machinery is a capital expenditure. Depreciation you need to check. Stores and space consumed. Repairs and maintenance, there are two types of repairs, revenue repair and capital repair, you need to check that. Labor expenses, interest paid on borrowed capital. If borrowed capital is for acquisition of the fixed asset. Preliminary expenses, scientific research expenses, you need to check all those things. Then keep in the mind the nature of the concern, whether it is a manufacturing entity or trading entity or service entity, business carried on by it, and the capitalization policy of the assessee. Because for a builder, building is not a capital expenditure. Okay, for a manufacturer of the car, purchasing the car components is not a capital expenditure, it's a revenue expenditure. So you need to check that. Nature of business will change the capital and revenue expenditure classification. Then second point, we are talking about personal expenses debited to profit and loss account. As an auditor, you should be having enough brain to understand. By looking at the expenditure, you can guess out that this particular expenditure is a personal expenditure, it's not a business expenditure. So serial number, voucher date, voucher number, account head in which it is claimed, maybe traveling, maybe food and beverages, maybe assessee has gone along with his wife and kids to some foreign tour and debited the expenditure in the P&L account. So name of the person in respect of whom expenditure is incurred, account head under which it is debited, description of the expenditure, reason for treating it as a personal, any other remark that you have to put it here. So that is there. Apart from that, they have given some extra commentary on it. Also scrutinize the following expense account, expenditure and presents and gift. Sometimes it is a personal gift, but they will treat it as a business expenditure. Traveling expenses, repair and maintenance done at the residence, they will debit it here. Bank charges, entertainment expenses and all, they should not be debited to P&L account. If it is debited, then it is our responsibility to put it in the tax audit report. Expenses on advertisement in media of a political party, this is completely disallowed. It is not allowed here. Yeah, but assessee can claim deduction under section 80 GGB or 80 GGC. Here it is disallowed. So chapter 6A deduction is eligible for the same item, because whenever you do the advertisement with the political party, we do not call it advertisement. Technically it is a donation given to the political party, and donation is not a business expenditure. That's the reason it is disallowed under PGBP, but it will be allowed as a deduction as a charity under 80 GGB and 80 GGC. So that detail you have to have here. Expenses incurred at a club, yeah. So as I told you, entrance fee, subscription fee and any other facilities that you have enjoyed in the club, that you have to record it here. Ensure that payment made are reimbursements, like reimbursement of entrance fee and all to the employee also included. Obtain from the assessee particulars of the club expenditure in the following manner. So date, voucher number, name or director of the employee who are going to the club, entrance fee, how much is amount for catering, subscription, rent and other. You have paid rent, you will pay for conducting some seminars. If separate account for club expenses has been maintained, ensure that All expenses relating to club have been debited to such account only and not to the other expenses. Also scrutinize the ledger account of staff welfare, entertainment expenses, sales promotion, miscellaneous expenses. So these are the headings under which they usually hide. They usually hide the personal expenses. So that's the reason they are asking you to do the extra scrutiny here. Penalty and fine, I have already told you. If it is a breach of law, then it is disallowed. You have to mention that. If it is a breach of contract, it is allowed, but still you have to give the commentary on that. Why company has paid penalty to somebody? What was the breach? Whether it was in the violation of the law. If it is in violation of any law, then you have to be very strict about it. Okay. Ask the assessee to furnish all the expenses by way of penalty or fine if there is any such expenditure, and then segregate the same as per the requirement. So this is for penalties. Then amount inadmissible. This is for clause number 21B now. Clause number 21B talks about section 40 clause A. With love, in our batches we used to call it clause section 40 chotu A, because you cannot read it as 40A, because 40A is a different section. This is section 40 clause A. So it's a clause A, and what is there in clause A? There are so many items in clause A, but the primary highlighted item is the TDS. You have made payments, you have debited lot of items of expenditure on which TDS is applicable, but company has either failed to deduct the TDS or deposit the TDS. Both are the considered as fraud here or default here. And if the payment is made to the non-resident, or foreign companies, 100% disallowance is there. If the payment is made to the resident entities, then 30% disallowance is there. This is the general knowledge of the section that you need to have. Based on that, there is a reporting requirement created under clause number 21B. So look at this. Ascertain whether assessee has made any payment of interest, royalty, fees or technical services, other sum chargeable under the Act. It has to be chargeable under the Act. Any expenditure that you are incurring should be taxable in the hands of the person who is receiving. There is the payer and payee involved. If it is a taxable in the hands of payee, then only the consequence of TDS will be attracted. Yeah, it is outside India, or if the payment is made in India but to the non-resident or not to the, it is to the foreign company. All right. So you have to deduct the TDS. If you do not deduct, then 100% disallowance will be there. Check for this particular section. Okay, check the head of TDS, salary, interest, royalty, commission, brokerage, technical fees, professional fees, amount payable to the contractor, sale and purchase account, share purchase and sales account, income tax, wealth tax, any other account, salary, provident fund, all these account you need to check. Okay, and identify what are the consequences under this particular clause. Any amount not deductible under section 40A should be presented. Not deductible. Why it is not deductible? Why is it disallowed? Because you have failed to deduct the TDS. That's the reason it is disallowed. So you have to create table here. Serial number, accounting here, total amount, amount inadmissible, and comment. You must also know that if you have rectified your default in future you have deducted and deposited the TDS, then whatever expenses which were disallowed in past will be allowed in the future when you make your default good. Okay, so those discussions are done here. Let's not go deep into it, but you are supposed to do it in a very rational manner. You need to have a TDS knowledge, a detailed TDS knowledge to verify whether any expenses are missed out TDS compliances. Yeah. Then any amount inadmissible under section 40B. This is only applicable for the partnership firms and LLPs. Okay, and this is applicable for AOP and BOI. Let's not talk about AOP and BOI because that is very rare, but you know that you cannot give salary and the interest to the unlimited extent to the partners. So there are limits, no, on interest on capital, or interest on partners fund. It can be capital, or it can be fixed capital, or it can be current capital. Maximum amount of interest that you can give is 12% per annum, and that too it has to be as per the partnership deed that you have created. And if it is the remuneration up to 3 lakh rupees of book profit or loss making entity, the limit is 90% of the book profit or 1,50,000, whichever is higher, and above 3 lakh rupees, any excess, okay, whatever is excess above 3 lakh rupees of the book profit, we have to give 60% of that excess as a limit. Once we have computed the limit, you may give more than this, you may give less than this, but if you have given up to this, then there won't be any consequences under 40B. If you have paid more than this, then that much amount will be disallowed in the hands of the firm, and whatever amount is disallowed in the hands of the firm cannot be taxable in the hands of the partner. So whatever is allowed in the hands of the partner, only that much, whatever is allowed in the hands of the partnership firm, only that much amount will be taxable in the hands of the partner. Allowable is equal to taxable. Whatever amount is taken as a deduction by the firm, only that much amount will be taxable in the hands of the partner, and reporting will be done under this particular clause. Okay, next. Remuneration to working partner. Remuneration has to be given only to the working partner. You cannot give it to the non-working partner. It has to be as per partnership deed. All those things are there in the sections. We will not go into deep of that. Interest is maximum 12%. It cannot exceed more than 12%. Yeah. Then amount inadmissible under section 40A3 is one of the favorite section of all the articles in the office. Even a new joining, maybe if it is your first day of the audit, and if they have given you the vouching work, you know that in vouching, one of the rules that you have always followed, any expenditure more than 10,000 shall be disallowed in cash. Okay, so whenever you do the cash vouching, this is a favorite point of all the articles who are working in the firm, and in fact for consultant, you know that you are not supposed to incur expenditure exceeding rupees 10,000 otherwise by account pay check, account pay draft, or electronic clearing system, or other prescribed mode. In other prescribed mode, now we are having debit cards, credit cards, Bhim UPIs, then we are having NEFT, we are having RTGS, we are having NEFT, all those things are there. Okay, so like banking transaction, government technically is talking about banking transaction. You are not supposed to do the transaction in cross check, bearer check, cash. Specifically they hate cash more than 10,000 to a person in a day. Then some people act over smart. If the expenditure is 30,000, they create 3 different vouchers, or they split it expenditure on 3 different dates. If that is done, that is okay, acceptable. I cannot say it is not acceptable. Legally it is there, but ultimately you need to know whether to rely on that particular client or not. Because if client can play with this, then client can play with so many other things that you should keep in mind. Yeah. So for that you have to open the cash book, cash voucher book, and put the filter column. Any amount more than 10,000 should be highlighted. Okay. So, but sir, there are certain application in Rule 6DD. What happened? One of our client is into trading of eggs. He's into trading of eggs, and he purchased eggs from Gujarat and distributes in Maharashtra. So what happens? He makes a lot of payment in cash to the poultry farms. Poultry farms are run by usually farmers, and they accept only cash. What can we do? This is what at least it is said by him. They accept only cash. Now, because they accept only cash, obviously government have sent him the notice because the amount was in crores. Okay, the aggregate amount in a year was more than 2.5 crore, if I'm not wrong, and he was served a notice that justify why you have made this much of cash payment. And then we have submitted Rule 6DD explanation that there are certain exceptions provided under the law for acquiring the agriculture produce, poultry product, dairy product. There is an exception for the cash circulation, but we advise our client very strongly nowadays. Google Pay and all has become very common. Why are you dealing in the cash? Help government to build a better economy, and that's the reason you should always tend not to use cash to the maximum extent. So even if there are exception provided under rule number 6DD, specifically for procurement of agriculture produce, or farm product, or poultry product, or dairy product, or handloom product which are made without aid of the power, so there are certain exceptions provided under rule 6DD. If it is attracted, then the disallowance will not happen. Apart from that, for GTA you need to remember the limit is not 10,000 for goods transport agents. For goods transport agent, the limit per day is 35,000. This is for transport industry. We have provided extra exception for that. Okay. Next clause is clause number 21E, payment of gratuity. Whenever you are doing the payment of gratuity, you need to remember, if and only if you are making actual payment of gratuity to the employee, or you are depositing money of gratuity to the gratuity fund, then only you will get a deduction. Only creating provision of gratuity without making actual payment, you will not get a deduction. Okay, so you need to know gratuity rules, where the gratuity is deposited and all. Okay, it has to be in a notified approved mode. So here you can see the provision for contribution, provision is not applicable. Unapproved gratuity is not applicable. Accrued but not due, it is not applicable. Accrued but due, it has to be paid. I'm telling you, it has to be paid, then only it is allowed. So provisioning basis, it is not allowed. It has to be actually deposited, then only you will get the benefit of gratuity payments. So you need to know that as well. Next one is any sum paid by the assessee as employer not allowable under 40A9. Now 40A9 talks about if you are making payment of provident fund, gratuity fund, superannuation fund, or any other fund. Okay, this is again for the benefit of the employee. It has to be either to the recognized fund or it has to be for approved fund. If you are making payment to unapproved or unrecognized fund, then disallowance will happen under this clause. Nobody in nowadays is doing payment to the unapproved or unrecognized fund. At least that much knowledge everybody have. We are not supposed to make payment to the unrecognized fund. Next, contingent liabilities. You have to do the reporting on contingent liabilities. Obtain schedule indicating the contingent liabilities being debited to P&L account. Now you know that contingent liability means something which may or may not happen, and it is linked to the future event which is uncertain in the nature. How could you debit that expenditure to the P&L account? Okay, scrutinize correspondence relating to the case in the court of law, and if any contingent liability or liability for uncertain expenditures or provision for uncertain expenditures created, that is disallow, you have to do the reporting under here. Expenditure inadmissible as per 14A. So if a person is having two business, imagine me only, I am a chartered accountant as well as farmer. Now I have to incur two types of expenditure because I am running two types of businesses, CA firm, consultancy firm, and farming also. Farming is exempt in income tax law and CA firm is taxable in the law. Now what will I do? Come on, tell me. Where will I book more expenditure? Obviously, I will try to book more expenditure in the CA firm and less expenditure in the farm. So farm labors, payment of farm labor will be done by the CA firm. Any expenditure, any asset which is required for the farming, okay, so that will be done by that will be taken by the CA firm. Why am I doing this? I am shifting the benefit from the farming to the CA firm with only one agenda in my mind, to evade tax. Because here there will be more profit, but I don't care of more profit. That profit is fully exempt from income tax law, and here the profit is taxable. So this particular profit will be taxable. Because it is taxable, I have to regulate it, I have to reduce it, and I can reduce it by claiming more expenditure. That's the agenda. And assessee should not do this. That's the reason section 14A is there. Any expenditure incurred by the assessee in respect of exempt expenditure shall not be allowed as a deduction, and it's the auditor responsibility to check that if assessee claims that he is having exempt income, he is having agriculture income, then section 14A should reflect in your mind and you should check this. Amount inadmissible under proviso of section 36 subsection 1 and clause 3. If any expenditure on borrowed fund which is before put to use, before date of put to use, if you have spent any borrowing cost, interest cost before asset put to use, those interest are capital in nature, it should be capitalized to the books of accounts. And any expenditure of interest done after the asset which is put to use, that interest is a revenue expenditure, that should be allowed under section 36 subsection 1 clause 3. So this is the very big clause that we have concluded here, section 21. Sorry for not covering disallowances in detail, because I told you we have already covered disallowances in very much detail in our PGBP discussion. If you wish to know about the disallowances, please watch the PGBP lectures. But here more of that, whenever there is a disallowance, it's a reporting requirement that you need to keep in mind. Yeah, thank you.